Welcome to ICICIdirect. Joining us now is Naveen Agarwal from Motilal Oswal AMC to talk to us about his budget expectations. All eyes are on the announcement of Budget 2022 that will be introduced in the Parliament on February 1st by the Finance Minister. Industry has already sent its list of demands from real estate sector asking for its age-old industry status to be granted in the upcoming budget, while the stock market insiders are seeking removal of LTCG tax. The macro background for this budget is very different, Naveen, from last year. Last year, we were working with COVID and an expansive monetary policy, but things are different this year. On the horizon, we have rising current account deficit, the CAD at an 8-year high, global backdrop of tightening policy, higher crude prices, and of course, lots of other state elections too. Naveen, the 2021 budget was a growth-dominated budget and re-rated the market. Is there anything specific which should come in this year's budget that could excite the market? Do you really think the government will announce a growth-oriented budget or a populist one, especially ahead of state elections on this budget on the 1st of Feb?
Right. So basically, firstly, the government has anyways, even ex of the budget, been making some really path-breaking announcements. As you're aware of, the production-linked incentive scheme to revive the whole, manufacturing sector. Now, that is something which is a big deal across sectors to, revive manufacturing in India. We've given it away on a platter to our neighboring countries, including China. And the only thing that the industry really expects from the government is to honor all the commitments relating to the incentive payments now that the businesses are going ahead and making those spends. Also, as far as infrastructure is concerned, that's a big deal. And we have 100 lakh crore plus national infrastructure pipeline that the government has announced, and we have a lot of details available on that. So really, what is expected from the budget is to ensure India's Euroclearability by ensuring that we address their foreign tax issues, stuff like, who will pay the tax, the KYC of the foreign client. If we resolve that and get India into the bond indices, then there's an expectation of fairly sizable inflows on an annual basis for the next decade of the order of $200 billion over the next decade. So that I think is really a very big deal. The other thing that is expected is that the real estate sector has been down the dumps for the last decade, and we are seeing stamp duty waivers, low mortgage rates, some correction in real estate prices, all driving an improvement in offtake as far as this sector is concerned. But to ensure that this becomes more structural, this becomes more sustainable, I think continued SOPs from the government to home buyers is something that can positively impact the sector. This is really the largest part of the Indian economy. And I think finally, privatization has been lagging the targets meaningfully for the last 3 years' time. This year, the expectation was to raise 1.75 lakh crores through privatization, and we're sitting on less than 10,000 crores of divestment receipts as of the end of December. If the LIC issue goes through, then we will reduce the gap in terms of the target versus the actuals, but there'll still be a gap. And if LIC issue does not go through, then we'll end up with literally 5% of the annual target likely to be achieved. So really, privatization is an important opportunity for the government, which we hope the government will, deliver on in the coming fiscal. We've seen disappointments on that for the last 3 years' time.
Right. Naveen, is there anything you're wary of, anything you don't want the FM to do? So what do you think is non-negotiable in that sense from a market point of view? Any tax increases that needed to, or rather should be avoided at this juncture?
Well, this has been March 22 has been a phenomenal year in terms of the total receipts growth. We are looking at a 30% growth in total receipts of the government. We are looking at government collecting over 2 lakh crores more than what they had budgeted for. So I think the least that the markets would be expecting is a stable tax regime where corporate taxes are not touched. Personal taxes, if not any cuts, at least they are not increased. The taxes relating to investments in equities, whether it is capital gains, etc., all of that is not tinkered with. So I think one would expect, a stable tax regime over a period of time to be more conducive for the markets rather than trying to tinker something, in every budget. I think that is what the markets would at least expect from the government.
I mean, on taxes, will there be some sort of relief or relief provided from a direct tax perspective? And what do you think can be done from a sector perspective that the markets really would like to see?
So as I said, the corporate tax rates are reasonable now, and there is no need to tinker with that. As far as personal taxes are concerned, the government is now taxing peak income at over 40%. I don't see any need to change that. Definitely not increase that. If there's a cut that the government wants to consider, given the huge gap now between the peak corporate tax and the peak direct personal tax, that's a big number, so they can consider that. But
Right.
really, I'm not expecting any major tax changes. As I said, stable tax regime is something that augurs well, for the overall economy. As far as sectors are concerned, I think real estate is something that needs attention. Housing is something that needs attention of the government. I think rural economy definitely needs support. We have a weakening rural economy. You've seen the commentary of companies like Hindustan Unilever. We also have impending state elections. So I'd not be surprised if there are some SOPs for housing, some SOPs for the rural economy, and finally some SOPs to boost private consumption in the immediate future. So those are the kind of things that I think the government can use its strong tax buoyancy to attend to.
And I mean, anything that the budget can do to push consumption further, because I think this is going to be the turning point, if any, in this budget.
India is quite unique in the sense that the workforce that earns a regular wage is a very small part of the overall economy, less than 25%, and so the remaining remaining part of the workforce is kind of called vulnerable employment. And I think if the government can do something to support this vulnerable employment base of India, which has actually got impacted by the COVID waves, in terms of temporary personal jobs, sources of income, any of those will be a big support or boost to these households as well as to private consumption. And I think that is something that the government may look at or should look at, in my view.
Right. Naveen, I want to also talk to you about banks, for instance, right? I mean, this is one of the largest sectors that we can't ignore. Any kind of booster shots that you're expecting from banks? Banks have been asking for a lot more push to privatization, maybe. Anything really for this sector?
So basically, as far as the banking sector is concerned, the government has done a bunch of things with the public sector banks to consolidate them. I think they need to really finally, take the leap in terms of some privatization moves there, because you have the results of the banks are now available. The private sector banks mostly are in a reasonably good shape. The corporate lenders have reported some spectacular numbers over the last couple of days. We've seen ICICI Bank, we've seen Axis Bank, most likely SBI will report good numbers. I think what is really required is the tail end of the PSU banks, where a logical conclusion to the initial consolidation moves, and to finally, move ahead with privatization should really augur well, both from the point of view of the economy, because we expect credit growth to start picking up over the calendar year 2022-23, from being really lackluster over the last couple of years. And so stronger banks will help that cause. And more importantly, the government has been pumping tons of money in these banks for the last decade. And even from the budget point of view, it will be a big relief once it changes hands in favor of private sector.
Right. Naveen, two-wheelers, they've been seeing heavy buying in the run-up to the budget. The EV push I'm talking about has been the talking point as well recently. Any favorable outcome from the budget? How much of this is already priced in? Do you think there would be some sort of big sops coming in from the two-wheeler space?
Anything that the government does to help the rural economy will help both the consumer sector as well as the two-wheeler sector, because a majority of the demand or the consumption for both of these businesses come from the rural economy. So anything that they do there will help. But I think as far as the two-wheeler ecosystem is concerned, uh, I think once EVs become mainstream, which basically means that once you solve for the range problem for a battery and the cost problem for the battery, once those two things are addressed, you will really see anyways a wholesale shift from ICE engines to electric vehicles. And we have some credible players in the business already. Some big bang announcements have already been made in the past. Maybe the inflection point could be a year or two away, or maybe 2 3 years away. We really don't know. But whenever that happens, this is something that will really help the sector. For now, the central government and the state governments are giving FAME subsidies and other subsidies to boost, consumption of EVs. But basically, anything to help the rural economy will also augur well for both the consumer sector as well as the two-wheeler sector.
Naveen, talking about distinct sectors, the pandemic, the second wave, and the third wave have wreaked havoc in the Indian economy and impacted millions of lives and millions of sectors, right? From an industry perspective, what about smaller consumption sectors like education, hotels, travel, tourism, hospitality? I know expectations are running high, but what do you think? Some of these sectors could see some relaxation in terms of easy access to loans or reduction in taxes to survive and thrive in the coming year?
I hope so. Basically, the number of restaurants in India are down by 20%. The bankruptcies and change of hands in weak hotels is all pervasive. The travel and tourism industry has got very badly impacted. So I think any SOPs by the government for any of these businesses will augur very well, particularly now that hopefully these COVID waves are behind, and with lesser impact on the economy and personal life post the vaccination drive of the government. Uh, I think that to really let the sector come back to pre-COVID levels in the first phase, and to take it to much greater heights in the second phase. Really, anything from the government in terms of fiscal SOPs, in terms of incentives, in terms of subsidies, in terms of uh, you know uh, 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 attractively priced loans. I think all of those are much needed, and I hope the government does something about this.
Naveen, what could be a surprising element, or what do you think could lift the market sharply on the budget day and post that? So, if I were to ask you any few sectors that you're betting big on that you think could have surprising elements, of course, positive surprising elements in the union budget.
Uh, we, for one, don't bet on sectors on the back of budget and don't have any expectations from the budget. I don't know if the markets has any expectations given
Right.
the liquidity tightening that is happening globally. You've seen the crash in the markets today, and the fall in the markets in the last few days globally and in India. So I think what could really help the sentiment of the markets is if really there are any surprises as far as capital gains or dividend distribution tax, anything to show that the government cares for the fact that we now have 80 million DP accounts versus having 30 million DP accounts a few years back. And this is still really way short of where India should be. And to encourage them, we want to really, provide them with, an attractive tax regime. I think that is something that, till recently we had no capital gains tax on long-term capital gains. Till recently we had much lower dividend distribution taxes. Now we don't have any dividend distribution taxes, but dividends in the hands of the investors are taxed at the marginal rate of taxation. So I think those are not expected from the government, but if they come through, that'll be a positive surprise and will definitely help the markets, particularly at a time when they're anyway seeing pressure, globally and in India.
I'm glad you bring that up. And I'm just going to take a cue from that. The markets are looking very tender right now. I mean, globally as well, the FOMC outcome is what seems a rate hike at this point. In fact, a larger than anticipated rate hike is inevitable. 52-week low in the US, and NASDAQ is seeing a big slip. Crude is trading at levels that we haven't seen in the last few years. Geopolitical tension on a few borders. Keeping all that in mind, and of course, a great 2021 behind us, what do you think the year's going to be like for the equity markets? Anything but smooth sailing?
It's never been smooth sailing for the markets. If you look at the last 20 years, we've had drawdowns between 10 and 60% every single year, although the markets in the last 2 decades have compounded at 15% per annum. If you look at the 2002 to 2008 bull market, when Nifty moved up 6x from 1,000 points to 6,000 points, we had 7 double-digit corrections, and 2 of those were in excess of 30%. So it's never been smooth sailing for the markets, and this year will be no exception to that rule. However, I think the kind of rally that we've seen due to participation of retail investors in small and mid caps, the kind of crazy pace of unicorn creation and funding of that part of the economy, and then that making way to the IPO market, I think some of those will definitely see some signs of sobering, in my view. But that, in my view, is not something to be fearful about. That, in fact, in my view, will be an opportunity. And I think if you see a correction in the markets of anywhere between 10 to 15% from here, we believe that we are in a super cycle of corporate profits, where corporate profit to GDP can go up from 2% to something like 5 to 6%. And this correction should be a golden opportunity for those who are under allocated to equities or who are looking to invest in equities to really jump back in, so that they don't move the whole long-term cycle that we see for the markets unfolding over the next 4 to 5 years' time.
Right. Thank you very much, Naveen. It was indeed a pleasure to talk to you as we gear up for the big day, Budget 2022 on the 1st of February. That's a whole list of expectations from the industry and, of course, announcements that could potentially lift the market sharply on Budget Day and post that. Thank you, Naveen. Great talking to you.
Likewise. Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.